Hey everybody, it's Seth and Paul of Everything Went Into. On this episode, we look at a piece of real estate, a 6-unit in Akron, Ohio. We take a look at the numbers straight from off the internet, off the interwebs. Paul analyzes the deal and tells you if it's good or bad. Keep your eyes out for some shady dealings from these realtors and these sellers. Right now on the Everything Money channel, let's do it. Hello, everyone, and welcome to the podcast.
Andrew brings Paul a deal of the week.
And I'm here too.
Seth's there too.
I bring the podcast. I'm bringing the deal today. I'm bringing the podcast. I'm bringing the wood today, Paul. I brought you a 6-banger deal. We like looking at real estate on the podcast. I don't own any yet, but I would like to. I've done one flip in my life. It went okay.
It went well.
It went really well, actually. Yeah. And someone passed this deal to me. I have friends telling me that if I want to get in, Paul, on our past shows on YouTube, we've looked at single units. Mm-hmm. And Andrew has been telling me, why don't we get you into a 4-unit, a 5-unit, something of that nature. So we found this 6-unit in Lakemore, Ohio.
Where is Lakemore?
I have no idea.
I think you don't know?
Well, I think it's near Springfield, but when I put it in...
Springfield, like Dayton, Springfield?
No. Like Springfield, like East Akron.
Oh, I didn't even know.
This is East. This is definitely East Akron.
What are you doing in Springfield, Ohio, where I'm
out in the middle of nowhere,
taking girls to dance clubs or whatever?
This is in Springfield, Ohio, right on Springfield Lake, just east of Akron by the Akron-Fulton Airport. It's a 6-banger. Paul, let me try to describe it. Now we don't have the pictures up on the board quite yet, so I'll have to send some pictures over. So this is a 6-unit. There are two units. There are 2 bedrooms. Two. Thank you, Paul. 2 bedrooms. There are 4 1-bedrooms. They're nice inside. They're old. It says 100% occupancy. It's been owned for 30 years.
If it was 100% full, what's the rent per year to collect?
It says here that the rent they're getting is $45,600. Okay,
and they're saying no vacancy there.
Yeah, they're saying 100% occupancy.
Okay.
Mm-hmm. And they say that fixed expenses, tax, insurance, utilities, and trash is $18,648. And the net operating income is $26,952. Do you want to write that down or no? You don't care?
Yeah, $26,000.
$952, which is a cap rate of 10%.
Let's call it $27,000 NOI.
Mm-hmm.
Okay, so we're not going to put this in Recalc right now. And the reason being,
go on.
What I want to teach on this deal is how full of shit this listing is.
Already? Paul, you already know?
Yes. So let's break down the expenses of the property. Okay, expenses. Now, guys, as I'll always explain, I will have numerous people coming to me and saying, Paul, look at this deal. It's so good.
Mm-hmm.
Then I asked them, have you ever seen a deal listed in which the person listing it didn't say it was a great deal?
Well, no.
And then has it always been the case where every single deal that gets bought does very well?
Well, no, that's not true.
Okay, so obviously there's a discrepancy between what they're portraying and how it happened. Now, one side of it could be you're just a bad manager. That's possible. That's very possible, actually. There's a lot of bad managers out there. But one of the first things I always tell people is when you're looking at a property and you're looking at the numbers the seller gives you, you have to be able to look at the expenses and determine, are they thorough? Recalc is only as good as the inputs you put into it, right? Garbage in, garbage out. That's a very common thing. On LinkedIn this week, I made some posts and somebody was telling me, yeah, it's garbage in, garbage out. Exactly. If you just put these numbers in there, the deal is going to look awesome. At a 10% cap rate, you're borrowing at 4.5%, you're going to make a killing. Can you give me the expenses they included in there?
Tax, insurance.
Taxes.
Insurance. Utilities and trash.
Utilities. Trash.
Yes.
Can you think of any other expenses that are not listed there? By the way, did they break down those taxes, insurance, and utilities and all that stuff?
Not really. Not in the numbers.
So the first thing is taxes. I guarantee you they're giving you the taxes on the current owner's tax rate.
Yeah, shouldn't they?
No.
Oh.
They should get the taxes on if you paid their $269,000 ask price.
Okay, so they're asking $269. You're saying that
If it's based on $200, your taxes are going to go up, 35%? So you're immediately going to have a tax increase off the dribble.
Oh.
Insurance. They could be getting in a good insurance rate because they have 100 units. So they're paying for insurance and they're breaking it down for 6 units instead of out of 100.
Uh-oh.
But if you're going in and buying it for the first time, you have to understand, like, well, wait, I'm not going to get that big portfolio discount. So you got to do insurance on your own. Utilities. How vacant was the property? Mm-hmm. If the property is vacant, they're claiming it's 100% full.
Yeah.
Great. Utilities. I'll let that one slide. Trash. It is what it is. Can I ask you a question? Mm-hmm. They're assuming 100% occupancy. So they're saying right now, not only will the property never be empty, they'll never have an eviction, they'll never have a person paying late, they'll never have a person skip out on them, ever. Mm-hmm. I'll ask you one question. I will make one proposal to anybody out there. If you can find me a landlord who's been a landlord, even if this is with one unit, for over 5 years, and tell me that they can tell you they've been 100% full with no issues on collections ever, I will give you my entire real estate portfolio. It's impossible.
So you're saying you obviously have to factor this in.
You have to factor it in. Because guess what? The second a unit goes vacant, how long does it take before you turn the unit around, get it ready, and then rent it out? Mm-hmm. So if you have 6 units, and if 1 unit per year, 6 units times 12 months, 72 possible months of leasing, correct?
Yeah.
If you have 1 unit that is vacant for 2 months, that alone takes you down to 98%. You're like, oh, it's not a big deal. That's only 1 unit. That's saying you're only our portfolio averages about 35% per turnover per year. So about 35% of the units will go vacant, and the typical time is about 2 months between going vacant, turning it around, putting the money into it. So right there, you're looking at it going, there's going to be a vacancy there. They're not even putting any vacancy. 0% vacant. Folks, I want you to, bless you, I want you to understand something. Mm-hmm. I haven't even gotten into the things they're missing from their analysis. I'm just talking about the things they currently have here that were wrong. And then I started with the vacancy. They have 0% vacancy. A bank's going to underwrite 10%. That 45,600, automatically a bank's going to say, nope, it's more like 40,000.
Yeah.
So you're taking your $27,000 in profit and you're already down to 22 without even touching any expenses they've missed. So the taxes need to be higher. The insurance is probably going to be higher. Now, let me ask you another question. Who's cutting the grass in a 6 unit?
I would assume I'm hiring you.
You're the landlord. You're going to have to pay for it.
Yes.
Where's their lawn expense?
Or snow.
Next one. Snow. Who's plowing the driveway? Question is, yeah. Let's make it.
Let's not. I know where you're going with that verb plowing, Paul. But let's just keep it plowing out
snow
of it.
They don't have there. Oh, by the way, no maintenance issues. The property's never gonna have a maintenance issue.
Right. What if the roof?
No, forget about the roof.
Water here. Oh, really?
Hey, what about a toilet gets clogged? Hey, a light switch goes out. Whatever it is, we typically factor in $700 per unit per year just in maintenance. And for a property like this, that's $4,200. So, let's recap. I've already found $4,500 in vacancy issue, not put in there, and $4,200 in maintenance and repair.
Yes.
Without even and what about lawn and snow? How much is it going to cost to cut the grass?
How many grass cuts do you do? Maybe
26.
Is that it?
Yeah.
26.
I haven't seen the property. How big is the land?
It's let's see. It's a half an acre, a little over half an acre.
Okay, so let's call it $40 a cut times 26.
Okay.
1,000. How about snow plowing? How much is snow plowing going to be?
It's a big driveway, 3-car like U-shaped driveway. So I mean, yeah, you can't just let the snow pile up, right, Paul?
How many snow plows are you going to have a year? 20 to 25 at an average of $50. Another $1,000. $1,250.
You got to plow all the snow out.
Oh yeah. So guys, I didn't even touch everything yet, and I've already taken the expenses from 18,600 to 87, 97, 11,000. I've already taken the expenses from 18,600 to $30,000.
So they say that the net operating income is $26,900.
Yep, I'm already down to 15,000.
Okay. I mean, do you expect?
I haven't even put management fees in, which I wouldn't tell you to put in there. These are real costs you're going to have. These are, I don't care who you are. You can, unless you're going to cut the grass yourself and snowplow yourself. And even then, you're going to have some expenses there.
No.
It's not going to be zero. Even if you do it yourself, that's going to be $500. That's going to be maybe $250. But these ones, if you do all this work yourself, it's still going to be $2,500. You're still going to have costs associated with it. You're putting no value to your time. So that's the issue, guys. We're not talking about, I'm just trying to teach everybody here, just like with stocks, with real estate, don't just take the numbers for what they, just don't take what everybody gives you and say, this is the Bible.
Yeah.
You have to sit there and ask questions. That's it. Right now, by watching this video, hopefully somebody out there goes, holy crap, I didn't even think about the tax issue. I didn't think about the main, all that stuff, and it saves them on a bad deal.
There's no reason to even put this in our recalc. It's probably not.
Well, let's just say I decreased the profit went from 27,000. Let's just say it goes to 15,000 because I probably forgot some stuff in there, right? 15,000 a year. 15,000 divided by 269. If you pay ask price is what? This is the cap rate now. The new cap rate, 15,000 NOI divided by the sale price. Because remember, cap rate is net income divided by sale price. 15,000 divided by 269. It's 5 point some.
5.57.
5.57%. Can you make 10 or 12% buying at this? Absolutely. But my question to you is, you're going to do all that work for 10 to 12% return?
Well, I'm sorry. How did you go from 5?
I'm just skipping steps. I just know, I think it's going to be roughly around there. Just don't worry about that. Just all I know is that putting some debt on this and all that stuff, you're going to get at best 10 or 12% return. So my question to you is your time worth 10 to 12% return? If you say it is, more power to you. You just have to remember, I'm not telling you not to buy. I'm just telling you, don't think you're going to get 25, 30% return buying at a 10 cap because it's not really a 10 cap. My first deal I ever bought, you know what they told me? They told me, Paul, you're buying an 8.4% cap. I actually bought a 6% cap rate. I lost in value $1 million because I believed the numbers they gave me. Why would they lie to me?
Oh boy.
Yeah. Luckily here on a $269,000 deal, you might only lose $40,000. But the point is, it's still money you've earned. If you're okay with 10 to 12%, this deal will probably be okay for you. Just pay it down, keep it good, do it yourself, pay down debt, put the work in yourself, and 20 years from now, 30 years from now, you'll have a paid off piece of real estate that's generating some cash flow. It's okay. It's just, I want you to understand, it's just like buying stocks today. If you buy stocks today, don't expect to make a lot of money in the next 10, 12 years. If you're okay with that, great. Just like this, if you're okay making 10 to 12%, more power to you. Go do it. I'm just telling you, don't believe their numbers. Because based on their numbers, you're going to make 30% returns.
We need 30% of the viewers right now to smash that like button. Be one of those 30%. Hit that like button in the bottom right corner if you like what Paul's saying.
Guys, it takes 2 seconds to hit the like button, literally right now.
Thank you so much. We appreciate that. Paul, I guess I always wonder, at 269, is there a bartering thing? Can we come in at...
Of course.
You can come in at 235 and see what they say, or...
But that's what I'm trying to tell you. I don't want people to go in just to go in. I've paid full ask price before. Right? I paid full ask price a couple of times. Why? Because I thought to myself, the property, I'd be willing to pay more than the full ask price. I want you to come in on a property at the price you think the price you know you're willing to pay. And right now, 269, I don't think is a number. If I were to sit there and guess a number on this,
go ahead.
For that kind of market, Seth, do me a favor. Pull out your calculator.
Got it.
And let's assume the net income is 15,000, and let's say we wanted a
7 cap.
Yeah, let's do a 7 cap. What does that equal? I'm scared.
214.
Okay, so call it 215. Do I think the property is worth I think you'll probably do okay at 215 if the analysis I did right there was right. I think you'll be fine. If you bought it at 215 and did the management yourself, I think you'll probably do okay. Now, I don't know how willing the seller is. They might be super desperate to sell. It might have been in the family for a long time and they just want to get rid of it. I don't know. Maybe they paid $50,000 for it 30 years ago. I don't know. I don't have a clue.
Owned it for 30 years exactly, it says.
What was that?
Original owner from 30 years ago.
So the taxes alone are going to go up a ton. Because I guarantee they've had it for 30 years. The tax base is probably very low.
And the tax rate changes on a sale of some sort, right?
Not the tax rate. The value of which your taxes are based off of. So this might be this $15,000 might still be high. It might be like $12,000 in profit. I don't know. But they also didn't give us the rents per unit. I don't know if you have upside in putting money into the product. Like if you're an owner who's going to manage it yourself, you can go put the work in yourself and you'll do very well. Mm-hmm. But I think around 215 probably makes sense.
So I guess I ran this past our mutual friend who might be a partner in this because he's looking to invest, and I would probably manage. And not much thought. It was like, I like this. Let's go for it.
Is that what he said?
I mean, like, yeah. Like, it was like, yeah, I kind of like this. At least we like the unit. It's not all tore up. Like the area. Really like the area. So at what point, I know, explain to me, again, folks, when I make, like, financial decisions in this world, whether it's magic cards or buying businesses, I think of little Paulie here as a little birdie on my shoulder, just like him dressed as a little
What time did you call me last night?
What's that?
What time did you call me last night?
I don't know. We talked in the evening.
Yeah, it was funny because you're like, Paul, I just sold some magic cards. It was so weird for me.
Yes. If you haven't watched in the past, I'm an avid Magic the Gathering player, and it's crazy. It's like controls my life. It's a lot like stocks, though. They go up, they go down regardless. My point is, Paul, is like, I hear you saying if you overpay now, go over that shtick one more time.
If you overpay now, that money is gone. You can never make that back up again because the property is going to make what the property is going to make. So before debt, it's going to make whatever amount of money it makes. It's going to make. If you pay $1 million for it or $100,000 for it, this ain't going to change. So would you rather pay $1 million for it or $100,000 for it?
Obviously, $100,000.
So every time you pay more than you should, you're just sacrificing dollars. Now that doesn't mean though that the price I'm saying you should pay for it is the right price. What I'm telling you is maybe 10 to 12% paying $269 is okay. You're like, listen. It gets us in the game. We're happy with it. It gets us learning, gets us a tax deduction here or there. We're cool with 10 to 12% because I don't think I'm getting that in the stock market for the next 20 years anyhow. Okay, great.
Yeah.
That's awesome. Good for you. Seth, for you, I'd sit there and say, do you really want to manage and take your time to manage for 10 to 12% a year?
Probably not. You know, we've gotten some feedback from some viewers that say, Paul, every time we fire up a deal of the week, it's just Paul telling me that this deal is shit. And then we're not going to buy.
I don't think 215 is far off from 269, though. I know it sounds crazy to hear. I don't know.
And how do you not take emotion to this and say, gosh, I really want this at 227?
Go for it.
Yeah.
I'm okay with that. I'm just telling you, just be aware that you're not going to do huge numbers.
Yeah.
At 227, 230, you might make 15%. Okay.
Yeah.
That's not bad. Remember, what I buy it for, what other people buy it for is going to be a totally different number. Because you didn't put management fees in here. I have to put management fees in here.
Yeah.
I have management costs in here that you don't have.
Well, what does that cost?
Oh, yeah, forget about it. You're talking about $5-6 grand more extra. I could never buy a property like this because of my management team. You could. Yeah. But don't go into it going, wait, lawn? Wait, snow? Wait, I had to pay for maintenance and repair? Oh.
Well, I brought that up in the fact that they're always bad deals because I guess that's the point of the video is to show people that's not what this person, this seller is telling me online.
I'm not trying to be negative. What I'm trying to say to you is not when somebody's trying to sell, the second that the property is sold, they don't care about you. They will never, ever, and that's not being negative. That's realistic. That's being, you're going to sit there and say, well, I wouldn't. Yes, you would. You would move on from somebody. You got your money. Why would you have any more money invested? Why would you have any more effort invested in the deal?
Yes.
Their job is to show you the best possible scenario. That is their job.
Yes. Write in the comments. Let us know if you've ever bought a house from a realtor and they called you 6 months later to ask how you're doing on those payments. Just let us know if that's ever happened. So
not even about that. It's just about like, you know, I mean, my very first deal, I remember being like, those mother effers. And they comment and said to me was, hey, we disclosed everything to you. And I was like, yep, buyer B. And I wish I'd had somebody like me saying, Paul, just be aware of these things. Because yes, they honored their, my first deal I lost $1 million on, they honored their legal requirement to me. But because of that, you got to be aware of it. As Warren Buffett says, be wary of anybody who's going to make money off of your decision. If they're going to make a commission off your decision, make sure you keep that in mind. I'm not telling you don't do this deal. I'm not trying to poop on every deal. My job here is to teach you to say, hey, here are the things to be aware of when going forward. I'm kind of like the lawyer. Lawyers have a bad rap because their job is to tell their clients, here's what you're getting into. As long as you understand what you're getting into, we're good. I'm telling you what you're getting into. You're not getting into a property that makes $27,000 a year. That is 100% a fact. They didn't include lawn care, increased taxes, snow plow, and maintenance and repair. Those are 4 things that you cannot go without.
Or occupancy.
Or occupancy, and they didn't include a vacancy in there. Mm-hmm. Those are things. I didn't even touch the things that, other things in there that, okay, well, you could put I told you I didn't touch management fee.
Yeah.
I'm like, okay, you can manage it yourself. Mm-hmm. Which is a lot different than a year ago. I'd be like, no, you got to put management fee in there. Fine, just don't put management fee in there. I'm cool with that. Mm-hmm. Have a portfolio of 20 units that you manage yourself. Great. But don't think for a second you're buying a $27,000 property. That is definitely not happening. I remember once we have a mutual friend of ours. He went to high school with us. He was trying to get into real estate. But I scared him off. He stopped asking me questions because one time he came in with a deal, and I literally looked at him and said, I guarantee you will lose money on this deal. And he laughed. I go, and Andrew was there. He's like, 100% you're going to lose money on this deal.
Lose money.
Lose. I without equivocation, I was like, you will not even make $1 in cash flow in this deal. They were missing so many things. They were missing everything. It was like this deal. I was like, dude, you're buying it based on this. You're not going to have any cash flow. If you just put this, and this in there, and I didn't touch the other stuff, he never called me again for real estate advice. Because I scared him off. I wasn't trying to be a jerk. I was just trying to sit there and say, people are going to lie to you. And guess who was selling it to him? A buddy of his. He never bought the property, luckily. I met the buddy of his at a birthday party. He was like, well, if you look at the numbers this way, I'm like, no. No.
If you look at the numbers this way.
Yeah. I'm like, the numbers don't lie. You can't get away. You can't sit there and avoid these actual real-world expenses. These are real-world expenses. These are not made-up things. I'm not making stuff up here. I didn't bring in eviction costs. I'm not going to bring that in and say, listen, your job is to put good tenants in there. Are there legal eviction costs? Of course there are. Mm-hmm. I didn't bring that in. I'm just talking about the real-world things. If that scares you off and I poo-poo, that's my job. I view it as my job to do that here. But we're not far off. Seth, I think you could do we should put it in Recalc at some point at $230,000 and see how it looks with this. Mm-hmm. Might not look bad.
Nice. Thanks for joining us on the Everything Money channel. If you want to see more deals, comment below. If you have deals, comment below. Give us a link, and we'll let Paul take a look at it. We definitely have some people commenting from all over the country saying, hey, I'm looking at this deal here.
We got people in Europe.
I'll be darned. Yeah, so smash that like button pretty please. Go ahead and subscribe. We appreciate your support. And as always, it's Seth and Paul on the Everything Money channel. Thanks, guys.
S&P, baby.